Hello friends, in this video, I will share with you the strategy I created using free indicators on TradingView once again. As you can see, I strive to create profitable strategies with as few indicators as possible because having a cluttered chart can be a significant disadvantage for you. Additionally, I want users to have the basic version of TradingView, which has limited indicator usage rights, to be able to benefit from it easily as well. Today, in the trading model we will utilize Bollinger Bands and MACD indicators by optimizing them with different settings. Let's begin with our first example. First, we will look for a clear divergence in the MACD indicator. Yes, as you can see, a negative divergence has formed here. This indicates that after a while and a certain amount, the price is likely to reverse downwards. And here, the MACD histogram indicator showed a red bar, simultaneously with a red-colored, high-volume candle closing below the lower line of the Bollinger Band. The stop-loss level can be placed above the recent swing, or above the blue-colored middle line of the Bollinger Band. This preference may vary depending on the trader's risk appetite. The target is a 1 to 1.5 risk-reward ratio. Let's look at another example. First, we are looking for price indicator divergence. We observe a divergence where the price is making higher peaks, while the indicator is forming lower troughs. And as you can see, while the MACD indicator continues in red, a red candlestick closed below the lower Bollinger Band, the risk-reward ratio would be 1 to 1.5. If this level is captured, the entire trade can be closed or considering taking some profits to aim for even greater gains. Now let's look at an example of a long position, but let's apply the technique of taking profits gradually. Now let's look at an example of a long position, but let's apply the technique of taking profits gradually. In this trade, We will enter the position upon the upward break of the pivot line. Entering the trade in this manner is a preference. It is not necessary for the upper line of the Bollinger Band to be broken upward. It is at the discretion of the trader. Here, we will enter the trade and target the 1 to 1.5 risk-reward ratio as our initial target. Then, we will set a recent high level as our ultimate target. I will show you one more trade. In this trade, we will adjust our profit target to the nearest dip level. You can adjust your profit target in this style, because there is a high probability of the price retesting recent dip or peak levels. If these levels are reached, it is important to close the trade or take at least a 50% profit to bring the stop-loss level to break even. This is because double bottom, double top formations that may occur at this level create a potential trend reversal possibility. As you can see, the negative divergence is extending, and we are patiently waiting for the right entry opportunity. Yes, the pivot line of the Bollinger Band has been broken downward. A satisfying price action has formed. We can consider taking a short position from here. Let's take a final look at an example of a long position and conclude our video. If you like this strategy, please don't forget to hit the like button. Don't think I haven't noticed those of you watching without subscribing. I've seen all of you. Goodbye and take care. See you soon.